All right, folks, we are back. Looks like we are in a bull market again, right? So it seems. I'm Coach UV. This is the Unique Trading Group. And of course, you guys know this is where strategy meets mindset and discipline turns into income. And I tell you right now, there's a very interesting market. We talked about this market weeks ago, and now we're right back dead in the center with a volatile market. And if you got the proper game plan, we can definitely make some money. Now, just a couple of weeks ago, we talked about these moves that could happen, right? We had that big move up, right? And we wanted to know what the key levels were. Is there a trap? Is there a continuation going on? Well, I tell you, once you guys see these charts and you get this game plan together, I'm pretty sure it's a lot of opportunity out there for us to make some money. So I tell you what, do me a favor, go ahead and smash that like button. Subscribe to the channel if you haven't already. YouTube is telling me that 60% of the viewers are not subscribed. Why not subscribe, guys? It's free. Get this game. Let's continue to get this money. All right, now let's get to the S&P. We're all set. We're all ready. We had a big move today, right? And what you guys see in front of you is a V bottom reversal. Make no mistake, this is a V bottom reversal, but we still got some grounds to cover, and so you want to be the one on the right side of the trade, not the one chasing. Now, this is the daily time frame. Now, let's keep this short and simple. We're going to run through a series of things. I want you to understand the context to know where we're going, all right? So, we fell further down. For the past 2 days, we've been rallying, right? You see that we bottomed out around, let's say 628, right? 628, 630. We bottom out. For the past couple of days, we've been going up, right? Now we have a little bit of resistance here. Now, right here, we have this overhead resistance that we got to get past, right? Okay, we got to get past this overhead resistance here. And as you can see, these two red lines here, these are my pendulum swings, the megaphone, right? And the market likes to do what? The market likes to go back and forth with inside a range, okay? And right now we are dead slap in the middle. All right, now if you're not familiar with the daily price movement range, all right, this is the DPMR system that I'll talk about. You simply take the high and the low and the mid way number of the daily pattern, right, the daily candlestick, and you get you a daily price movement range. So that's the green, yellow, and red. And I want you guys to understand that in order for us to see any continuation towards the upside, we're going to have to clear 660. 660 is definitely what we want to clear. All right, and when you get this V bottom reversal, it's very particular pattern, right? You get it here. Now you don't want to chase. What you want to do is you want to wait for that pullback, right? See here, you want to wait for that pullback. Now we're going to go to a smaller time frame to catch it, but this is a theory. If the trend is up, right, and we still have some bull momentum, we could see that higher low get formed right here on that pullback. Why do I say that? Because we have a gap, guys, and we know there are going to be some rookies who are going to be chasing. So we're going to go down to the smaller time frame. Now, if you know me, you know I like to use the 1 hour, right? 30 minute, 15 and 5 for the actual entries, but we're going to go to the 1 hour for the sake of this video tonight. Let's take off everything, remove all of the drawers. All right, we want this to be bare. Now, what happened today and around the 30th, right, we had this gap up. Okay, so right below us are gaps. Gaps do get filled. All right, and if this is your first time watching, understand that gaps just mean that there were no buyers and sellers present at the time. So at this moment, there was no buyers and sellers. All right, and we also have another gap here towards price here, and there's a gap right here. Now, where am I going with this? Understand that the trend is your friend, okay? All right, now before we go any further with the V bottom reversal and those pullbacks, let's go back a little bit, all right? Because we talked about these moves on previous videos, and just to recap and let you guys know what I mean, all right, we were just at these levels 2 weeks ago, all right, 660, all right? Now we're around 655 at the time of this recording. It is the 1st of April, and we're around 655. Now, 650 was a wall that we blasted through today, right? So that's what a gamma is. Gamma is fuel for price. Remember that gamma is fuel for price, and you want to know the other game being played on the other side when it comes to options, all right? The option chain tell a whole lot of story, and plus wherever the banks are positioned, you're going to want to know that. So if you're not familiar with any of these things that I'm talking about, go back and check out the playlist. If you're new, all right, check out some of the playlists and you'll see exactly where I'm headed and where we think live with the group that we trade with. during a regular trading session, because I prepared you guys week in and day out with the levels and how to prepare and trade like smart money. So just remember, there was a trap and we were already at 660 and now we are right back there. Now, why do I say that? Because I talk about trades like the two-try failure. This is a technical pattern. You let the bears try once and you let them try twice, no matter how sloppy the W looks, but this is a W shape. Okay, what does this mean? This means that price tried to go down and it failed to break lower. We went up here. We did not retest the highs within the middle of that W. We retested the lows. Some people call this a double bottom. All right, I call it a two-try failure. It's human behavior. I see traders trapped, right? And once I know that I got them trapped, right, we have what? We have trap 1 and we have trap 2. Once I know that I got them trapped, now what I want to do is I want to be thinking, where are the stops? All right, where are their stops? Because now I know I got them trapped, and we want to use their stops as fuel for the other side, guys. There's another game being played and I want to introduce it to you. Remember that these are stops, guys. Okay, now why am I saying that? Because right in front of you in real time, the real price in front of you on the 1 hour time frame, you have that same pattern here. Let the bears try once and let them try twice. Remember, it's W shape. And what we have? We had people chasing puts. Puts meaning we want to go to the bottom. They're selling to the bottom. When they seen this red candle, they assumed that we would continue lower, but we didn't, and they got trapped. All right, and once price broke above here and we got this volume coming in, we've been gapping up ever since in the first. All right, now we've moved from 629 all the way to 655. Now I don't know about you guys, I'm not a math expert as I would say, but I can count, right? And that's about a $20-$30 move, right? $20-$30 move in just a matter of a couple of days. The banks do not give you that kind of move. Now, this pattern is always going to show up. The W shape, right? Right here is where those stops were. Now, isn't it ironic that the stops were right by the 21 EMA? Now, if you're not familiar and it's your first time watching, again, let me let you know, I like to use a 21 EMA. It's pretty much all I need to get some of the best high probability setups, right, to trade an edge. And we have our Bollinger Bands here on TradingView. The red is for resistance and the bottom is for demand, all right, support, okay? And price goes in between my ranges, and I like to take calls, trades towards the upside when price is above. Now, I'm showing you how ironic that is. Remember here, the two-try failure. Let the bears try once, let them try twice. And you see the stops are right at the neckline of the W here and above the previous high. And that's what we have here. Right by the 21, price got accepted. Say it with me, the ATM sound. We retested these highs. Price likes to revisit these swings, these pendulum swings. We talked about these pendulum swing, guys. And now this brings us right back here to the most important part of the video. Now, if this is your first time watching and this is something new that you've never heard, any of the terminology, it's just fine. We go over these things live in my group. If you want to join a community, right, that teaches you how to fish while you learn, then that link is down below. But it's one thing to know how these things work. It's another thing to know how to execute when it's really happening with real money. That's where the edge comes in. That's where the community comes in, right? It's perfect, all right? So just for that disclaimer, I want you guys to understand that. Now, the move for tomorrow, right, on the 2nd of April, you want to understand this, all right? Tomorrow, there will be some people who are chasing. We are currently at 655, but you're not going to be the one, right? We do have some economic data, and before we get into the actual technicals, hope you guys are enjoying so far. Realize that tomorrow we do have unemployment claims at 8:30. So if you're trading the 9:30 session, you won't be able to actually get that volatility move. But this is what is going to affect price. It will move price, all right? And later on today, on that day, excuse me, guys, at 10:15 a.m. we will have member Logan's going to be speaking, and we have another speaking around 12, and we have natural gas at 10:30. All right, so it's going to be a very interesting move. Whenever these data points come out, it reacts to price. There are traders and human behavior and sentiment, right? What is the market thinking when it comes to the war in Iran, all right? Oil, interest rates, banks and bonds. These things affect price, all right? Unemployment claims. And so usually the contrarian view is if unemployment claims are high, right? That's the contrarian view for the Feds. You would think that the feds would want people to be working, but it's the complete opposite. So we want to watch for that number. It's going to be real juicy, and I'm going to be watching an hour time frame, me and my group. Now, we don't know what's going to happen. Now, let's just say these scenarios happen. Let's say price falls back down, right? We have trap traders here, all right? What you want to see is price come back towards the 21 and possibly hold here at that 650, all right? 650 is your line in the sand, okay? All right, why do I say that? Because you want to hold that higher low, okay? Higher low, okay? And for those who are watching and don't understand what a higher low is, let's quickly say and show you guys what that is. Here is what a higher low is. We got higher lows and we have higher highs, okay? All right, this was a point in price. We went up and we came back down, but we failed to break the price here. So this will make this a higher low. We went up, same scenario, failed to break back down. This is a higher low point than this one, all right? Now, that's an uptrend and so on and so forth. The downtrend, on the other hand, is a different type of ball game. It's just a complete opposite, where you have lower highs and lower lows, okay? Lower highs and lower lows, and you want to recognize these patterns, simple elementary patterns that you want to recognize in order for you to catch the perfect entries and exits, all right? Why is this a downtrend, all right? Remember, this one is a downtrend and this one here is an uptrend. Higher highs, higher lows, uptrend, and lower highs. This was a high point. We fell. We went back up. We failed to retest those highs, but we went down again. So this would make this a lower high than that one. Go down, lower low. This point, low point, is lower than this one, and so on and so forth. That's what I mean by trend, uptrend and downtrend. And right now, if we're being honest with each other, if we're looking at this chart, right now we have an uptrend. So we want to wait for pullbacks. 650 could be a line in the sand. You want to get that higher low, just like we talked about right here, all right? But we have gaps to the downside. And with the economic data, depending on what it says, any tweets from Trump or anything like that, we could get a flush back down to fill more gaps. There's also a gap here. Remember that gaps are parts in the market and price where there are no buyers and sellers present. And so you want to try to catch the prior pivot levels. Which one is the best risk to reward for your calls? This is what you want to think about, all right? Right here at the 635 level, right here at the 644 level, and right here at 650, 652. Now, we're going to revisit this video. I'll always recap and let you guys know, because I'm telling you in advance what could happen before it happens, the way I always do. So go ahead and smash that like button if you're ready to make some money with us, all right? Now, I want to take you over to the fear and greed index. Very important to understand that we are in extreme fear, guys. Extreme fear. All right. And the quarterly just went over, right? Every quarter, right? We have 3 months in a quarter: January, February, March. Now this starts a new quarter for the year in April. All right. April, May, June. This is the next quarter. So you want to check the quarterly time frame on the SPY and understand where we are at extreme fear. Now, if this is your first time hearing about the fear and greed index, I'll quickly give you what it's about. All right. I want you to think about this. When everybody is super fearful is when we're supposed to be greedy. And when everybody is super greedy is when we're supposed to be fearful. It's the contrarian view. When everybody's panicking, we're buying cheap stocks, right? We're buying great stocks at a great value, all right? Just think about that. Put it in perspective, guys. All right, we were just at 620, 630 a couple of days ago, and we're already back at 650. What are the chances of us going all the way back to 700? Or even 675. What are the chances? You ask yourself that. Now that you have the scenario and the game plan and you're waiting for those pullback, if you're trading on the 1 hour or the 30-minute or the 5-minute, you want to wait for closing price, all right? Some people can't get into these trades and manage it the way professionals do, all right? We're getting in early, but we're waiting and we're watching the volume for the day, all right? Remember the trend. You want to wait for your signals, all right? So with that said, let's check out the put call ratio. This is a market eternal. All right, we are sitting at an extreme. Okay, anytime the put call ratio is at an extreme and we start to fall, the market rallies. All right, and we went up a little bit today towards the end of the day, and we sold off. All right, because there are more people buying puts. Going to be a very interesting time tomorrow to understand the timing. All right, because there are scenarios all around, okay? There's scenarios all around, and what you want to understand is that you can make money on both sides. So pick and choose and understand what your risk to reward is, because it's right in front of you. If you want to short the market, then obviously you're waiting for, let's take off these markings here. Obviously you're waiting for a simple line break, okay? A simple line break, okay? Price breaks below the 21, the same as it did here, okay? Look what we did. We broke out and we came back and rejected. Right back down to these lows, all right? It could be the same scenario when we break down, right? We break out of the 21, we come back to retest it, creating a what? Creating a lower high, like we talked about, simple trend, right? Okay, price rejects from there, okay? And what do? We continue to go down because they're trap traders, okay? But we also could get a different move, all right? Because right here's a line in the sand, all right? And ranges act like magnets, and we have a previous range sitting right here, okay? There's a range sitting right here, okay? And so if price can hold this range, there could be some rookies chasing here depending on where the volume and the sentiment is tomorrow. So you want to be able to watch that and understand that. Now, let's quickly go over to the quarterly, because this is your April trading signal. I want you to understand for the next 3 months, the next 30 days, it's going to be very important to understand where we're going. Right now, the quarterly time frame is showing that we have an ATR of 55. So the market can move up another 50 points from where we are right now. Now, that's ironic because you would think that all the sell pressure, right, with the fear, right, the war going on, everybody was on full-on panic, right? Full-on panic. They thought the market would drop, and we could very well much continue to drop. Remember that I said that we can't continue to drop. But right now, what do we have on a quarterly time frame? Right now, we have price within a thin zone. Okay, this is the volume profile. So anything below, and guys, you're going to want to go back and watch this video and study it, because you're going to be able to see how this trade can play out each year, each month, each quarter. The same patterns show up. So study these videos, share them with your family, go over them, review them, because I'm giving you pure game. Now, what I want you to understand is that if we lose, right, the low of 629.28, all right, 629.28, 630, all right. All right, these numbers here, all right, very important on the SPY. If we lose these numbers, all right, more importantly, let's give us a more accurate one, right? 650. All right, we're gonna use 650 here, 650.85. All right, you want to watch this number tomorrow, guys. 650 is a very important number, or it's a line in the sand for a put wall and a call wall. All right, a put wall and a call wall is something I'll talk about in my group. If you want in-depth information on it, join the group. All right, there's value there. I want you to understand what's going on beneath price, right? Right under the hood. All right, and so 650.85. If that fails at all, any tomorrow, we will quickly drop down to lows again. I'm telling you guys that now there's a possibility that we could sink. All right, all the way to retest 599 if we could. Okay, these prices are very relevant. 527, 597 right now. Okay, and 632, 630 is going to be a nice place for price to revisit again at 630. Okay, I'm going to make that line here. Now this is the quality time frame. Remember, this is a April trading signal for the next 30 days, for the next 3 months. All right, understand that. You can get a idea on where we're going. So if you're watching this later, if you're watching it on another day, just go back and play it and look at where we are on price in real time, and you'll have a game plan. All right, remember that this yellow line represents 630, 629. Now we're going to move down from the 3-month and move over to where, let's go to the daily so we can mark up our charts and see the optimal trade. All right, see that? Got that same yellow line. Now, if we reject tomorrow, remember 650 is going to be that number, right? First of all, if you don't know, if we open up above the previous close, which is 655.24, if we open up above 655.24 tomorrow, we will try to revisit 660 in these highs, okay? Understand that at above 660, remember, is the 21 for high probability trades. We like the ATM sound. We get above here, all right? reach these highs, all right? Going to be resistance there. We want to take profits around that number. Now, this is a nice swing. If we went from 630 all the way to 650, that's a $20 move. So we can get that same move from 650 all the way up to 680. I'm sorry, 660 all the way to 680. Another $20 move. But you want to secure some profits here. But if we cannot get past the previous close, which is 655, and we are below it right now previously, we will revisit some of these lows. 650 would be your line in the sand. Do not get caught in the trap, guys. You got to understand context. If you wake up in the morning and we're at 650, right? Wait the first 15 or 30 minutes to see what price does. You don't want to get trapped. 650 is a line in the sand. Below it, bearish. Wait for confirmation of a close. Above 655, the open, we're bullish and we're trying to retest 660. For those who are a part of the group, you will have some heads up tomorrow as we're trading, so do not worry. But for those who are not, this is your game plan, and I hope you guys have been enjoying it so far. Now, we're going to get off of the SPY. I think that's enough of that. Just quickly show you the Qs. All right, the Qs also have a V bottom reversal. Don't chase it, guys. Don't chase. All right, when the market does the V bottom, you always want to wait for the pullback. All right, likes to grind higher. Okay, grind higher. Same for the SPY. You want to watch it, right? We also have Tesla. Okay, Tesla is showing some strength as well, right? A lot of people bought these stocks up. All right, you see these same patterns, V bottom reversals. All right, it's right in front of you. The same pattern, the same as the Qs, the same as the SPY. There's really no change. We have gold. Let's check out gold. All right, gold is also looking the same. There are a lot of opportunities to make a lot of money. Now, I will say this on the SPY. All right, if we can get past 660, 680 and hold, there will be a spike towards 700. Now, it could take a month, but it will be smart for you to check the option chain on the SPY. And I encourage you guys to check the June and July option chain for SPY and ticker symbol MU, and see how we can get to 600 if you put more time on your contract. That's right. We trade contracts when it comes to options. Each option we buy is a contract and it's worth 100 shares. So that means that we can get SPY shares, 100 of these for cheap, less than $655. There's value in that, all right? Click that link below, join the Thriver community, and let's dive deep into that. Let me show you what my other students get and the value that they receive. All right, now let's actually go to the VIX, and we're going to finish up here. All right, now the VIX is a volatility index. If we continue to fall, guys, the SPY will rally, okay? Whenever the VIX falls, that means that more people are buying calls on the market, all right? There's less fear, less volatility, and we are beneath the 21. Remember, our edge is below 21, sell. Above the 21, buy, all right? It's the contrarian for the SPY. This is what you guys want to be looking at, okay? You want to be looking at that. Remember that I told you that we could rally, but you got to wait for context. If we retest these lows here, all right, you don't want to be the one chasing. We can retest these lows. Remember that yellow line we marked up, 629? All right, we can retest these lows just to make a what? A W shape. All right, these are 2 scenarios I gave you out of 4. All right, I hope you guys enjoyed the video so far. This has been your April trading signal for the next 30 days and the next 3 months. Appreciate you guys' time. Subscribe, hit that like button. All right, thank you guys for watching. I'm Coach UV. This is the Unique Trading Group, where strategy meets mindset and discipline turns into income. Until the next time, guys, peace.